Welcome back. You're watching the market right here on EtNow. Let's touch base with the management of Escorts. Rising rural demand has been driving growth for them, and that's pretty much given a known factor, something that's played in with the stock price performance as well. The market share expansion continues in that segment, about 1.5% higher for Escorts today. But I just want my producer to replay the year-to-date chart or the 6-month chart on Escorts, because that's where the story lies, and that's what we're trying to get out from the management as well. That's a 124% gain this year itself, a move that started at $300. Bharat Madan, who's a group financial controller at Escorts, joins in with his perspective on the business and the road ahead. Bharat, it's great to have you on the show. Thanks very much for speaking with us. Now, despite headwinds like demonetization, your revenues have grown 3 times of the national economic growth in FY17, indicating that all key growth drivers are in place. Talk to us about how this year is looking in terms of, the demand outlook, especially given that rainfall this season has been good. And, the expectation is that rural market pickup will help the overall growth numbers.
Yeah, I think you're right. The industry is showing pretty good trends now. The rural market are picking up. The monsoon has been well spread out, barring certain pockets where there have been some deficiencies in the monsoon, especially in the north and the central belt. Otherwise, I think generally it's been pretty well spread out. So we expect the demand should be good on the ground. And we, like I mentioned earlier, are expecting the industry to show double-digit growth this year.
How much of the recent uptick in your tractor numbers is pure inventory built up? I mean, I understand that tractor inventories were not very large in the system, and now with the better monsoon, better crop sowing, there could be a sudden inventory built up.
I think you look at our September numbers, so we were more or less, there's hardly any inventory build-up. So retails were more or less in line with whatever wholesale numbers were. But yes, July I saw there some months where we saw some inventory build-up happening. This probably will get corrected in next month or so, in October and November, when the festive season is over. And that's been the industry trend. So otherwise, there's no major build-up of inventory in the trade side. So this time, the retail demand also has been good. So which is a positive sign for the industry.
Standing of the pricing power, do you think currently you will be able to grow at this rate without offering any large discounts?
There was some disruption initially in the market because of the GST getting rolled out, and especially in the tractors, because there was an effect of the transition because the stocks, we didn't get any input credit on the stocks lying with the channel. So initially there was some disruption, but I think now more or less trade is coming online, and we expect I think the things will continue. So we don't expect to be any significant pressure on the discounting on the pricing side. So I think the prices are holding up. Yes, there was some inflation pressure in the first quarter because of GST. Industry hasn't really passed on that benefit, that cost impact to the market. So that had played out on the first quarter margin, but I think now going forward, we think those things will stabilize.
Agricultural machinery has been your mainstay with an over 80% contribution to your top line. But if we look at the domestic market overall, your market share is still the third highest. And yesterday, of course, we spoke to M&M on their focus. So it's interesting that we have you here today. Going ahead, what's the outlook for the tractors business? What's the kind of market share that you're targeting, which is in mid-teens right now? Where do you hope to go from here?
Well, I think, like I said, we've seen in the last decade or so, the industry has been pretty competitive, and there's not been much major market share movement which has happened in the industry. So we don't expect a very significant movement which will happen. Probably 1 or 2% here and there is possibility, which is probably the industry, within the industry you can look at. So I think thing will be more important to hold on to the market share, and whatever gains you can take in the niche segments. I think that's where we'll be really concentrating on.
So give us an update on your new offerings, and you're working in the agri space on developing new products and mechanizing services, renting equipment, etc. Give us more details about how the revenue mix would look like from the product side, extending out to the services side, and what kind of investment would that entail?
Well, we expect the service space is very exciting space to be in, and that's one area where there's a lot of potential for the industry, which can actually be very disruptive for the tractor industry per se. The kind of farmers category which is really going to cater to, which is the especially small and marginal farmers who own very low acreage of land, 2 or 3 acres of land, who can't afford to buy tractors. For them, rental business or service rental is something which is going to be a game changer in the mechanization. So that's the largest chunk. There's almost 60%, 70% of the population of farmers today are actually fall into that category. So we think there's a lot of potential really into that area. And again, depending on what business model really you can go for, it can be an asset-heavy model, it can be a leaner model. But this has a very good demand potential which can really get generated over the next 5 to 10 years time frame and can really disrupt the entire industry.
Okay. Okay, now I also want to understand some of your other businesses. You know, with Escorts, we always tend to focus on what's happening to the tractor demand. But what about your other businesses, railways? You know, my understanding of your company is that you're on a verge of getting out of some of your non-core businesses and extending and strengthening your other non-tractor businesses. So what's the update on your construction business, your railways business?
Surprisingly, this time, if you look at the first half of this year, I think the strongest growth we've seen actually happening in the construction equipment space within the company also. So while agricultural sector, we've seen the growth of about 20% on the tractor side. The construction has grown by almost 27% in volumes. So that's a very positive sign. I think same thing is looking at the trend on the railway business side also, which is again given 22% growth this time in the first 6 months. So I think overall, all three sectors which we are present in, and this is the core sector which we have really decided to be into going forward. So all three are showing pretty good signs of growth, and we expect these sectors will continue to really demonstrate these sort of growth signs going forward too, at least for the next 5-6 years.
Okay, Bharat, appreciate your time. Good luck, and thank you for accommodating today's interview request. Markets, meanwhile, if you look at the market action, well, the market action is centered not around a particular theme. Escorts and autos, they are in top gear. Well, that's the listing of the day, Pratap Snacks. It's expected to be a large listing. I mean, for me, Pratap Snacks really symbolizes our channel theme, which is Rise with India. I mean, a very basic business, which...
9, 8,
I think I'll
7,
just let
6,
the
5,
MC of the ceremony
4,
do all the talking,
3,
because it's a big day. You know,
2,
the minute you go public for any
1.
company, for any entrepreneur to see, the dream is to
Congratulations.
take their company public, and that's what Pratap Snacks has done.
officially
I expect it's going to be a rather massive bumper listing, and it is a bumper listing. It's a small issue, it's a niche area.